This episode is sponsored by City Traders Imperium. CTI is a prop trading firm looking for profitable Forex traders who need more capital. CTI will back its traders up to $2 million, which is the most in the industry, and thousands of traders worldwide are trading their capital remotely from their own home. It's the most flexible funding provider in the industry, where any strategy is welcome and overnight or weekend positions are allowed. Plus, CTI doubles your account every time you hit 10% net gain, which you can scale up to $2 million. Click the link in the description to find out why City Trader offer the best funded trader program in the industry, or visit citytradersimperium.com. All right, folks, here we go. We've got Druzy Banks here on the show. Now, as you can see there, he's holding up his phone. These are the three trades he's going to walk us through. It's getting blurry, but you'll see there that he made basically 5K in a day. This was today's trading. Welcome to the show, guys. We just shot an amazing podcast. You got to go and listen to this after watching this video. Link is below here. He walks us through his full story. How he surprisingly, the surprising sort of fact as to why he ended up doing the Q Banks course, and you're going to find that out as well. So, Druzy, welcome to the show. We're going to walk through your trades today that you did where you made 5K.
I ain't gonna lie, life's been blessed. I'm blessed to be here. Thank you so much for having me. I hope everybody's able to learn from this opportunity that I'm giving you and just see how it is and be in my shoes and how it is a day in the life of trading with Druzy.
Cool. And look, guys, just to let you know, this was a random day that we're doing this interview. So, I mean, this is just so happens he made 5K today. Okay. So, look, Druzy, do you want to share your screen and we'll walk through these trades?
Very first thing I do is I come on the higher time frame and I determine my trend. What I do is I use my zones of indecision to kind of see where it is that I am on the bigger picture of supply and demand zone based off of price rejection and based off of trend. So as of right here, we can clearly see that the market is in a downtrend. What I like to do just to kind of make sure I'm on point is I like to come to the polyline tool, which is right here. And I like to just draw a trend based off of market structure. So what I do is I draw my swing lows and my swing highs. I make sure I have the pencil click with the padlock here, and I like to stay on continuous draw mode. And what I'm doing is I'm just drawing my trend and just making sure I'm right. In the history of when I draw my trend, I switch back to the line chart. And if my trend that I'm drawing based off of candlestick data, based off of the swing highs and the swing lows of the market, I'm able to get that correct, then I know I'm kind of trending in the right direction. So fast forward, I do that time frame by time frame. So as of this time frame, as of right here, I can clearly see that the market broke structure. So what I'm doing on this time frame is I see the trend, I know the trend, I have my zones. I come on here and I add my indecision areas, because that's going to be a area of retest. So I kind of just want to make sure that I'm following the market guidelines and kind of just knowing where I am. Color coordination is a very big thing with me. Every time frame has its own color, so that way I write it down on my trading plan. So I know pink is for monthly, blue is for weekly, whatever the case may be. Now, what I'm doing on this time frame is, again, I understand my structure, but I'm making sure that I know the levels of my structure and where I am. So this is where using fibs kind of comes in. Again, fibs is just a tool that I feel like you need to use. Boom, I do it from wick to wick. And as you can see right here, I have a hidden PRZ, as I like to call it, the 70.50. It's a hidden area, and 9 times in 10, it's the third most volatile fib rotation zone for me based on my strategy and what I look at. So I see that price actually settled at a fib level. So I know that that is an actual market structure level. So then I work my way down again, and I know that all these are retesters. So these little pullbacks are 23.6. So I know I can stretch my fib out because I know where I am within trend. So then after I do that, boom, I see right here where the market settled on the same area of my zone right here, and where the market kind of made its higher low and continued structure in this great counter trend going up to break. So I know where I am within the market. I know I should be looking more for buys than sells at this moment in time. So I know what I'm looking for. So boom, I kind of go time frame by time frame, just looking at market structure and just knowing where I am. So I know the big pushes, I know what everything is. So we fast forward, let me go back real quick. So I know that this is a valid market structure level. So now I'm doing it from this swing to this swing, and I got 50%, which means that you're in a balanced market. So then I like to move my fib up. So the higher the time frame, the stronger the data. So then I kind of come down to here, bada boom, bada bing, to where I'm at right now. So then I go down to the lower time frames. And I'm just looking for an area of indecision. And the way I draw my areas of indecision, I draw it from wick to body. And what that's going to give me is where the buyers and the sellers are indecisive at, where they can't kind of tell what price is. As we can clearly see from the rally of last week, well, clearly it's broken structure to whatever trend you may have think, and we're looking for buys, despite the market kind of exhausting as of right now. So what do I have right here? I have a zone where the market can potentially come back to retest and continue my trend. I also have another indecision area right here to where the market should struggle to break, which, as you can see, strategically drawing it, this is where this wick kind of came through. So I know that I'm looking right. So boom, after I draw that and I go ahead and I color coordinate, I then go down, I take my time and I go down to my lower time frames and I'm making sure that I understand structure. So on this 12-hour chart right now, I can see that this has 39 minutes left, but if this closes like this is what we call a tested candle formation. At the time, we only had this data right here, and this is the data I was trying to push up. So moving forward to the trades and it's going ahead to trend, I was able to catch this big push up right here. How I kind of saw this coming, let's go ahead and use a little bit of the replay tool and drop it back to right here before anything even happened. And we just had this data right here, right? Replay tool is very key to helping traders back test, but you got to make sure that you're true to what you see. So we know the trend, we know our swing lows, we know our swing highs, we know the area of indecision that we need to be. We know if it breaks this zone, we're downtrend. We know if we break above the zone, we're still in the uptrend. At this moment, it came and it retested, right? So I'm on the 4-hour time frame. I like to go ahead and plot what I call quarter points. These quarter points are institutional levels. Now, the quarter points that I plot are every 25 pips. Reason being, institutional levels, banks and everything like to kind of move the market based off of quarters. They normally like to move it off of 100 quarters, but you can see structured clearly with every 25 pip quarters. So I go ahead and I add these into my trading process, and these are actually my TP areas for when I take a trade from swing low to swing high. So I'm then doing these at every 25 pip range. And as you can see right here at the end of this zone was I'm going to have the 500 QP. And forgive me if they're not accurate. I kind of plot them as close as possible. And I kind of go into the market and kind of get what I'm looking for. So then after that, I kind of draw market structure. So what I mean by that is the same thing that I was showing you guys earlier. Every one candle that you see in the opposite direction of trend is just a retest. Every other candle is, every 2 or more candles is market structure. So normally the retests, what I like to do is I like to change the color on the retest candle. So I know it's a retest candle. The markets are more prone to come back to a retest area after duration of time. So I like to make them a different color so I know it stands out to me. So I say, hey, that's a retest area. I like everything is more of a visual aesthetic for me. So I like my visuals. So I'm able to kind of quickly look and continue flowing upon my process. So as you can see, we had this right here. And then we kind of had this movement. And then we kind of had this. And then here we are right now. So to many traders, this may look like a double top or whatever the case of the candlestick trading pattern is. As I know as of right now is that buys were in control. They failed and then sellers took over. Why sellers took over? Don't know as of yet, but I'm making sense of the data as I go down to the lower time frames. So all I'm seeing is that price is stuck in its form of consolidation ranging between this data. So my TP was set to the outside of this zone. Reason being is price should be more prone to try to break out from this swing low to my swing high. One thing that you can go ahead and see based on this 4-hour time frame is that based on the candlestick data, it found very good support right here at the 500 QP, and momentum slowly and surely been moving up. It tested this QP right here, but never settled here, and then came back to settle here. So from right here, based on this candlestick data and right here, this was the retest candle for my move. So me taking my time and going back down time frame by time frame before this big up push even happened, you're going to see how it is that I was able to catch these trades. So the very first trade I went ahead and took was boom. And I'm going to use a ray tool to kind of mark off my entries. So that way, when I go down lower, you can go ahead and take advantage of it. So the first move was 137.881. 137.81.18, sorry. So that's like about right here. So what made me take this trade at this moment in time? At this moment in time, keep in mind that this is the data that kind of happened for that big push. But as of this moment, look at the area. It's back at a main support area of my zone. Look how critical price has been respecting this zone based on this area. So I really didn't take the trade over here until over here during this time.
Until it was on its way up, yeah?
Yes.
And did you have a limit order or was it a market order?
Raw execution. Everything I do is based on raw price movement, raw. Yeah. So boom. So this is where your candlestick patterns can come into play, or at least you know how a seller's candle opens and closes. On this 45-minute time frame, sellers opened here and closed here, but respected this QP. So as you're going to go lower, you're going to see the area of opportunity. As of this moment in time, as of right here, buyers were in control as of this time frame when this printed above this QP and this was the retest. So I'm literally going apart and depicting candlestick patterns and movements. Keep in mind that my entry was here, but as of right here, before I took that entry, I had what we call a bullish engulfing, but a tested candle. So my rule of thumb is this: tested candles at the bottom mean that price is going to go up, and tested candles at the top mean that price is going to come down. It's basically where buyers and sellers can't agree on a level, but they're testing that range of price. And as you can see the data, as I zoom out to a higher time frame, buyers were in control. So is this really making sense of what I see based off the candlestick data? So boom, as I go lower and lower, boom, we can see based off of raw price movement again that, and let me change the color so you guys are able to keep along. I'll make it purple, which is my favorite. Boom, we have a bit of what I like to call some tight movement in here, but really a lot of retests. So I literally go from swing low to swing high based on how I draw raw price movement, and boom. So I had a false break right here, but that wasn't enough to kind of lead me into the trade. So literally going from swing low to swing high, boom. This is the main thing. So in a downtrend consists of lower highs and lower lows. So as you can see, the market has been making valid lower highs. This was a 23.6 based on my fib. So 23.6s to me are not good enough. They stand for trend continuation, right? So boom. So it's really just waiting for the market to break apart a major high point that it did, but I have to make sure I get my sense of market structure. So going down to the lower time frames of execute, what do I see? I see a lot of wick movements, which means that the market, based on my raw price movement, that the market is finding firm support on this QP level, but this candlestick pattern wasn't good enough. This candlestick pattern let me know sellers are still in control. So as you go lower and lower, it's to make sense out of data. So boom, this is the candle that changed my whole bias, letting me know that the market is ready. Look how this bullish candle closed. It closed nice and full, letting you know that buyers are in control, but that's not enough. The biggest thing is that it broke trend right here. It failed to complete a lower low and it broke structure. So right there enough, I had enough confirmations on the lower time frame to then make my bias. So what you're going to see now is something that I consistently do is I like to redraw my market structure as I go to make sure that I'm following around, and I like to zoom out to the bigger picture and make sure that I'm flowing along with the bigger picture. So as you can see, I'm going from swing high to swing low based on my philosophy, my method, should I call it, of just market structure movement. And as you can see right here, market was tired of making lower highs and lower lows. It failed and broke structure and then came back for a retest and then broke. So my entry, as you're going to see, was really based off of the retest and with spread. And hold on, let me kind of get this off. Boom, which is right here. I got everything I need. This main consolidation area of 23.6, this candle was able to break. I already know that I have strong enough support. So now what I'm going to do is this whole zone of where price ranged at, I'm going to highlight it, but I'm going to make it a nice, beautiful, transparent color, because the biggest thing is this: when you have these breakouts, you want to be able to zoom out to the higher time frame and just know where you are within the move. So boom, right? I'll put it a little bit below my entry. The biggest things when you draw is I draw from wick to body based on where I enter. And we're going to go ahead and make the transparency a little bit better so you guys can see it, but still keep track of it. And we're also going to make it a nice orange. So now, right? This was a candle that gave me all the data I need to. And look how this candle closed again, ladies and gentlemen. It closed very full, very solid, letting you know that at this 3 minute time frame, buyers are in control. But you're at such a low of a time frame that you need to have more confirmations on your bias. So then you zoom out backwards and you make sense of the detail. Boom, I can clearly see that the market is definitely ready to change directions. I can definitely ready to see that zooming out to the higher time frames that boom, before any of this happened, that I have another tested candle formation right here, giving me confidence, letting me know that, hey, I'm right. That consolidation was just price struggling to break that area, gave me all the confidence. The biggest one was this. On this 30-minute time frame, I have a very strong bullish engulfing, letting me know that buyers are definitely ready to be in control. So this was confidence alone that I needed to take my trade. And then I went ahead and I set TPs. So now we're going to go ahead and use the price long tool that I like to use, because I instantly set my TP for the 500 QP. And this is the end of my consolidation zone to where price broke out. So as you can see, one trade alone, I got 68 pips. But I wasn't done there. I then took another trade. And this was the learning opportunity that that really curved and made me. So the next one that I'm going to go ahead and show you is at 138, 161.
Actually, sorry, where did you put your stop loss for this one?
So my stop loss, let me go ahead and show you based on the lower time frames, because to get ahead and understand it, stop loss was the bottom of this wick. So on this situation, it was about 14 pips. Reason being was this was my swing low to move, and this is my high. I knew that if the market is really ready, it shouldn't have came back and retested this area unless it's ready to break this zone I have underneath. So for this trade, stop loss was 14 pips for me personally. I then went ahead and took this trade, honestly and truly, ended up, before it actually flew off into profit, this trade was honestly the learning opportunity, just because it ended up hitting the tighter stop loss that I set, which is really, hold on one second, because this was the learning opportunity. The stop loss was set at 6, let me see, because this was the one that makes or breaks you in these days, was 672, which is right here, literally at the bottom of the zone. So boom, this was the one that I got stopped out from this bullish engulfing, and this was the one I kind of stopped out right here. So this was the learning opportunity.
So that was your first attempt at the entry, yeah?
Yeah. So that was the one that I lost to $664.89. So again, little over 12 pips, but the market wasn't ready. So boom, I then got this one, and this one was the one that kind of drive the breakout and the retest. And then this one was the one that I got the entry at the 138.032, which was right here.
So scaling into the trade, yeah?
Yeah, this is scaling into it. So I'm going to go ahead and drop another rate line, because boom, you learn from your opportunity, you let the markets breathe, and then you come back again and you're able to execute. Boom, as you can see, it validly broke out, zooming out to the higher time frame. I have enough data to see that the markets are definitely ready to be on a continuous based off my bias. So boom, the markets are ready. I learned from my opportunity. I let the market breathe, and then I came back and retackled it. So that first trade I gave y'all was actually the learning opportunity. This was the win, and this was the one that I took for the 5 lots of $2,230.55, to where, boom, I ended up catching the 46 pips on this move. And then, go ahead.
Oh, I was going to say, did you put a stop loss on that second entry?
Yes, I did. I'm going to tell you where it's at right now. Stop loss was under this wick right here. Stop loss was 8 pips for this wick right here. So 8.5, almost 9. Again, my philosophy is small risk, big gains. So as you can see, boom. And then as going in, I scaled in on another order. Literally, I was able to, again, catch the momentum shift. And this one was at 138, 161. 138, 161, 161. which was right about here. And the reason that made me take this trade was, boom, this. So again, the markets were entering that range of price again to where it was stuttering and faltering. And this was the zones of the swing high and swing lows that I was stuck in. I literally caught a breakout. And after a breakout, I literally caught the bullish momentum and literally just flowed with it.
Yeah.
But this one was straight buy execution. This one was straight buy execution, literally catching the breakout. And then this candle happened so quick, I was able to snag it and slap TP. But this take profit for this trade was at, let me see, 32. This one is also at 500. So I was able to literally scale in 2 orders and literally have a magnificent day based off of this. So 1 learning opportunity, 2 trades based off of patience. Again, ladies and gentlemen, it's really about just making sure that you have enough technicalities to support your bias and definitely making sure the markets breathe. Again, the picture may not always be pretty, but my biggest learning opportunity of today was I was right here. Just had to have a little bit more patience and a little bit more stronger of a risk to reward as far as for leverage goes. But the market teaches you each and every day.
Brilliant.
So,
well, that's probably one of the best explanations of a trade I've seen since maybe even Raul was on the show, I think. So look, that's fantastic stuff, Druzy. Now, before we wrap up, what's the best way for the guys to get hold of you?
Druzy Banks, man. Just get at me on Instagram, DREWIZE Banks, BANKS on Instagram. Feel free to get at me. I have a number in my bio. If y'all want to hit me up, ask me any questions, feel free to. But just shoot me a DM if I don't answer, man. I'll definitely get back to you.
Cool, guys. Well, look, we did an interview before this little video here, so if you want to check that out, there's a link underneath the video, so go and click on that now. All the links that Druzy just mentioned are on that show notes page as well. So, guys, I hope you enjoy this. Remember to subscribe for future videos like this, like the video, and click the little bell, click all for notifications so you don't miss them in the future. All right, see you in the next one.